So today I've got one of those videos where I cover a lot of subjects in one video for you guys, and then as the video is titled, I'm going to show you a stock which I think is being slept on a little bit at the moment because the numbers are being very good. The new data that's just come out about this stock is absolutely amazing, and I think in the next 12 months we could see this stock go on to return over 100% and double up from the current share price. And I've also got an apology for you guys, which I'll show you in a second. So apart from that, hit the like button if you're new around here, subscribe. Let's get to 16,000 subscribers. Let's get started on today's video. So to start off with, I apologise. I made a bit of a mistake in yesterday's video. Yesterday, I talked about my number one UK stock for 2025. This is a stock that I think is a great opportunity and could come my number one UK holding in the next 12 months. That stock was Money Group. Now, when I did the video, I actually did not realise that at some point, adverts. Is this what you guys have to deal with every time you come watch my videos? It's unbelievable the amount of adverts that Google and YouTube are sticking on at the moment, isn't it? Like, you get the first advert and then you get another advert that you can't, the first advert you can't skip, and then you get the second advert. What a nightmare. I should have probably preloaded this. I'll tell you what the most frustrating thing is as well, is they're doing all this, and as someone that does make the YouTube videos, like, you get no more extra money for it as well, which is the worst thing. I mean, I don't know, now they're double stacking these non-skippable videos. I mean, even the content creators aren't getting anything for it, so I wonder what they're doing with all the money anyway. That's going off topic. Anyway, I wanted to apologise because I made a big mess up in yesterday's video. It's probably the fact that yesterday I ended up recording, I had work and I didn't get it done on the Sunday because I was doing a video on the Patreon, and I was quite busy during the day. I ended up recording the video at like 6 a.m, 7 a.m, and your brain fog, you know, you're still half asleep, and I made a big mess up because I talked about, like, one of the big bull theories that I had around the money supermarket doing really well is the recovery in the home services. And I said, if you look at where it was at, it was 38 million, and right now they're doing 16 million. So that's like a 22 million gap or something improvement. I totally forgot that I was actually only using half year results. So this isn't even a full year. So if I actually do lazy maths, that's actually 44 million potential than missing out on home services, which is even better than what I said in yesterday's video. I totally forgot I was only using half year results instead of full year results. So big apologies. Like I said, that's what you get for recording videos at 6 a.m, 7 a.m when you're still half asleep for you guys. So apologies on that one. JD Sports, what a day this is having. What a couple of months this is happening. Big rally. Last 6 months, this is up 43%. And I was looking at JD Sports, I mean, actually it's still only like 10 times forward earnings at the moment. But since they brought the last earnings out, the stock seems to have really liked them and rallied off their Q2 trading update that they brought out on 22nd of August. That really was like the next key driver of when the stock started bouncing up. So any of you guys that are JD shareholders, I'm sure you're doing really well at the moment. I'm just having a little think if I take a little profit off the table maybe on this one now, but yeah, obviously the majority of the position I would still hold, but yeah, absolutely flying at the moment. Another stock that's flying today, Warpaint. It was quite funny because the stock was only up like a little bit this morning, and I actually had like, do I buy more shares, because that was a really good update, and I thought, no, I'll hold off, and then it's having an absolute cracking day. To be fair, this one as well, like, it's only down like 16 forward times earnings, and the numbers they've just come out with are very good. I'm going to keep this quite brief because I'm actually going to be covering it on the Patreon and doing a full deep earnings review on the weekend. So if you do want to see more of a deeper dive into Warpaint's earnings, that'll be on the Patreon. But just some headline numbers. I mean, everything was good. Revenue was 25%, gross margin expanding, which is also really good, and that obviously leads to more profitability. EPS up 67%. What was great is not only because obviously the UK revenue was 17%, but the international revenue was higher than the revenue growth, and it doubled the UK growth, because obviously, yeah, it's great that Warpaint have cracked the UK market, but the fact that the US growth is growing even faster, the international, the US and the international growth, that's the key driver, because the UK is a good market, but the potential, if they come a worldwide company or a UK and a US company, like, there's mega difference in that, and the potential is crazy. Like, you talk from what a stock could come, you know, if they're coming dominant in the UK, they might come like a, you know, close to $1 billion market cap. If you start talking where it comes a worldwide business, you talk to the potential of like where Warpaint, you start saying, could this be a double-digit billion market cap company? And that's the big difference that you have there. And the fact that international growth is still very strong, and obviously it's second half weighted, and these results were already really good. Yeah, it's exciting for where potentially Warpaint could be in the next kind of few years. And like I said, you know, you're picking it up at 16 forward times earnings. I've been on about it on the YouTube channel for a little bit now. So yeah, looks like a good update from them. And obviously, you know, using Stockopedia, which I've got a 25% discount code on in the comment section. Obviously, the analyst forecasts are good at the moment, but we know the conservatives, so if that starts ramping up a little bit more, that'd be amazing. And I also had a quick look at Paul Scott's notes, and he said like these are very impressive, and I'll share that on the Discord for you guys, the full notes, and the notes on Genio as well on the Discord as well. So yeah, this week as well we've got the Fed meeting. So the Fed are going to meet on the 18th of September, which is tomorrow, and they're going to set out the interest rates. There's a lot of oohing and ahhing about what they're going to potentially cut. Is it 50 basis points? Is it 25 basis points? It is pretty much that we know they're going to cut, but what is the cut going to be? I think if you think it's going to be 50 basis points, then I think you're going to be disappointed. I think they'll cut 25 basis points. We see how slow they are to do things. There's no way they're going to jump to a 50 basis points cut. So yeah, I think it'll be 25 basis points, and that's what the odds are at the moment. I think everyone's going to be looking around the commentary. Are we expecting like, you know, 2 cuts? Are we expecting like 3 cuts? Is there going to be no more cuts? That's what we're all going to be looking at for, because what we're going to do is we're going to get the we get an updated projection. Let me talk properly. I noticed that yesterday when I was recording the video, like I was just so tired pronouncing some words at 6 a.m. It's well, it's clearly happening right now as I record this video, but not as much, and I notice it. But yeah, there's new projection materials coming out as well, and we'll get some suggestion on what they're going to be cutting going forward. That's what everyone's going to be looking at. Everyone knows there's 25 basis points cut coming, but how many more is there potentially coming is what the key thing will be, and that's what everyone will be looking at. I'll try to record a video if I can on that tomorrow. The only issue that I have is I'm actually going to Man City Inter Milan game in Champions League, so I'm at work all day and then I'm going there, so I'll really struggle to get the video recorded. So it might end up being Thursday, but I'll try to get a video on it for you guys. The other thing is the United Kingdom, UK inflation data is coming out. We're expecting inflation to stay exactly where it is from the last month. In fact, trading economics are actually expecting it to go down. We'll see what happens. But I remember a lot of people were saying, like, when we got to April, like, oh, inflation's going to go back up again. And we're getting towards like 5 months on now, and inflation is not going back up at the moment in the UK. So that is obviously something that a lot of people said, and it's not happening at the moment. Looking at the moment, the Bank of England are also meeting this week. They're saying that there isn't going to be a cut in the interest rates. I personally think there should be, because you look at the economic data, it's not great out there, but it is what it is. Yeah, the only issue that I have around the UK at the moment is the budget in October, and the other thing that makes me nervous is, you know, oil. If you look at oil prices, which I don't think I've got a slide up for this one, oil prices have been falling massively at the moment, so that's only going to help the case of like inflation coming down if oil prices are coming down. But the big thing that worries me around the UK inflation at the moment compared to like the US inflation is the pay increases. I mean, since Labour have got in, it's like handing sweets out. Like, it's, you want a pay rise, you have a pay rise. You want a pay rise, you have a pay rise. And we're not even talking like small pay rises. Like, some of these pay rises have been absolutely massive. And don't get me wrong, like, there's so many industries and so many parts that of public workers that haven't had the correct pay increases for many years. But that just comes down to that's a different subject. Like, the fact that they haven't had the right increases for many years, should have been some sort of stable increases during the time. When you just come back from this inflation jump and then you start handing those pay rises once again, and also there's a shortfall in the budget, which makes me laugh how Labour keep shouting out this shortfall in the budget, even though they're responsible for most of it. If you keep doing these pay rises, at some point that's going to have a knock-on in inflation at some point, and the UK economy, because you're going to have to raise this money from somewhere, and that makes me a little bit nervous, and that's the only little thing that's building in the background that's a little bit of a worry at the moment. But the stock that is the title of the video today is this stock I think can 100% in like the next 12 months, and it's DraftKings. I feel like this stock has gone a little bit unloved now. I mean, we look at the year-to-date performance, it's up 13%, which is, yeah, it's okay, but I would expect this to be outperforming the market. I think by the end of the year, I expected this stock to return maybe 20 to 30%, maybe even 40%. So I feel like the performance this year, I mean, it's okay, but I think it should be performing a lot better. And I think that a few people are sleeping on it, especially with the newest data that's come out. I looked at the stock yesterday and the stock was up 1%, and I thought, how is it only up 1%? Like, this is mega positive news for DraftKings. And I thought, you know, realistically, the days of like, I mean, at least $50, but $60, I think they're coming sometime soon. So obviously the NFL, which is the big thing for DraftKings, obviously as a sports betting company, the NFL is the number one sport in America, and obviously the NFL season has started not last weekend, the weekend before. And the key thing is to start looking at the data. What's the data looking like? And it's looking very, very strong. So they said that the first week of the season saw a 73% year-over-year increase in transactions. And then it said here that New Jersey, which is the longest running state for online sports betting, still grew once again at transactions growth of 50%. So you talk about a mature state. This is a state that's been around for many years now, and it's still in hyper growth mode. Like 50% growth, that's absolutely insane. And something else that happened this weekend, so it said here that there was a mix of results, so it could be another weak quarter on the first weekend. Well, what was even better this weekend is if you look at the results, we've had like weak outcomes at the moment, which has caused a little bit of an issue around the hold rate and a little bit of an impact on EBITDA. We've had 2 bad quarters. Well, this weekend it broke. So first weekend was not great for the bookies. This weekend was very good. Basically all the ones, a lot of the favourites lost. You had the 49ers that lost, which were probably big time favourites. You had the likes of the Detroit Lions losing to the Buccaneers, which was a big surprise. You had the Ravens beating the Raiders. The Raiders beating the Ravens. I think the Ravens are now 2-0, which is quite a big surprise. And the Cardinals absolutely thrashed the Rams. And also on Monday Night Football, I can't scroll down for some reason. What was a big surprise? Monday Night Football was a big one in America. The Atlanta Falcons beat Philadelphia Eagles as well, which once again was a big surprise. So very good for the bookies like DraftKings, for example. But going back to the main thing is, like, you know, you look at the growth here. Like you don't even need new states for DraftKings to do well at the moment. As you see, like New Jersey is still growing at strong rates, and this is what was in the Investor Day presentation that they did in November 2023. And if you look here, the growth of the TAM is in existing states alone. Look at the growth here, and then you add in if there is any new potential for these new states to come online, it's just going to explode. But even if they don't, this is still such a strong business. And look at here, this is the previous New Jersey GGR. And look at the growth that it's had over these years. It still grows at absolutely insane rates, as you see here. And it continues to grow, which is just so exciting. And then you look at the numbers that DraftKings have been doing at the moment. And this is the current numbers that they're expecting to do, which is now, you know, 40% growth this year, 21% growth next year, which is just insane. That's going to, you know, by the time we know it, that's going to be upgraded to like 30-40%. But the profitability is really ramping up now. I mean, look at the profitability. Year ago, EPS negative 173, now negative 0.27. Next year, positive 0.71, going positive, and the profitability really ramping up. I mean, if we talk about that DraftKings is going to do 845 million in profitability, how long until this stock, you know, all stocks are future thinking. We're talking about that's what, 24, 27 months away basically. You know, how long till the market starts going in 27 months time if we do 845 million in profitability and we're growing at 30%? When's this market going to start pricing this at the right levels? At some point that's going to really kick on, because when you're talking nearly $1 billion in revenue on an 18 billion market cap company growing at them sort of rates, it's quite cheap, isn't it? And that's, you know, how long till the market starts putting this share price up? I argue the case that this in 12 months time or even 18 months time, if they start seeing these numbers coming up in a couple of months time, the market's going to start pricing this stock a lot higher than where it is right now. And also that these are the numbers that DraftKings smashes. You know, I showed you the numbers then, but just to put you into context, I thought I'd go back to a year ago and what analysts were expecting them to do a year ago. And it's just quite squeezed on at the side of the screen, so I apologise if you can't see it that well. But if you look a year ago, analysts were expecting negative 0.84 in EPS. And right now, we're at 0.27. That's nearly a 1.60 increase on the EPS guidance in 12 months' time. It's insane, guys. And if you look at the revenue, we're currently forecast to grow at 40%. It's probably going to be even higher than that by the end of the year. But we're forecast to grow at 40%. Analysts were expecting this year 21% growth. So DraftKings has beaten analysts' guide 12 months ago to where they are right now by double growth. That's insane, guys. from a year ago. But then once again, you're going back to the stock of DraftKings, and then you start looking at the performance, and the last few quarters haven't really guided in the performance that well. If you go to a year ago chart, the stock is only up 22%. So you've had the EPS guide improve by nearly 7x. You've had the revenue growth double the guide from a year ago, and yet the stock is the same. Well, not the same value, it's 22% more, but it's definitely not a reflection of the numbers at all. And maybe the reason why the stock has kind of come down a little bit in the last few months is because we have the short-term effects at the moment. We've had that kind of weaker hold rate because of the sporting outcomes. We've had a little bit of a downgrade on the EBITDA because of the sporting outcomes, and obviously there was that little change in the Illinois tax. And Wall Street does that classic thing of thinking 2-3 months ahead, 4 months ahead. But when you look at the long term, the not only everything's moving in the right direction, it's just so far ahead of where people expected. And at some point, when these numbers start kicking in, all of a sudden Wall Street will turn around and go, oh wow, we probably should be buying this one now. And then we'll see it where the stock goes on one of those crazy runs and it rallies up, and we'll see the stock back at $50-$60. So yeah, with DraftKings, like I said, I just wanted to make a video because it's been slept on a little bit. Like, it's been a bit of a boring kind of couple of months for DraftKings shareholders, but at some point I think the next stage of where we see, we've had the stage where we've had the revenue ramp up, and then we had the stage what we've just gone through where we've gone from, people said they couldn't grow revenue because of competition, the smash dollar competition. We had the stage where people went, but they're losing money, and now they're not losing any money anymore. We're in the third stage of DraftKings now. The third stage is where they start showing the profitability. We've just seen them move $900 million in the right direction. They're managing, the costs aren't increasing. Any revenue increase that they have right now is going straight to the bottom line. And the next stage that we have is where people go, yeah, they're not making that much in profitability, and then they're going to be slapped in the face when the profitability starts ramping up, because it's all going to go down to the bottom line that they make now. And that's the third stage. And that's the third stage where I think we'll see DraftKings go up another 100%, and we'll see this stock do very well, and that's where we're getting very close to. That's the video for today, guys. I hope you enjoyed it. Lots of subjects there for you guys. I'll see if I can get a video for you tomorrow, or if it's about the Fed or whatever it is. A little bit short on time tomorrow, but we'll see what happens. But video for today, I hope you enjoyed it. Hit the like button. If you're new around here, subscribe. Very close to 16,000 subscribers. Apart from that, I'll see you in a bit, guys.